Here with this week's hottest stories in the investment world, this is Zacks Friday Finish Line.
Hello and welcome to the Zacks Friday Finish Line. I'm Ryan McQueenie, a content writer here at Zacks, along with another member of our content team, Adam Clark.
How's it going?
Today is Friday, July 29th. Adam is filling in for our usual co-host, Maddie, who is still, I think, wrestling bears at Yellowstone National Park.
Something like that.
And we're here to recap this week's biggest stories. So before we start with our headlines this week, again, if you tuned in last week, we had a lot of focus on second quarter earnings reports. That will be touched on again, another busy week. But before we get into the headlines, I just wanted to touch on a few signs we saw this week, really touch on the state of the economy. It wasn't necessarily surprising, but the Federal Reserve decided not to raise rates on Wednesday. Got a little bit more hawkish and seemed to imply with some of the language that we could still see an interest rate hike by the end of the year. It is unclear whether we will. At this point, I would say unclear is probably the strongest word I'm going to choose to use here. They don't meet again until mid-September. But in the official statement, the Fed said, quote, near-term risks to the economic outlook have diminished, the labor market strengthened, and the economic activity has been expanding at a moderate rate. I want to key in on the word moderate there because we saw a sign this morning that economic activity wasn't also fantastic right now. And that was with the release of the second quarter gross domestic product results. In Q2, GDP grew 1.2%, which is a little disappointing, is about half of what analysts predicted. So definitely some sluggish GDP growth. So I wanted to key in on those kind of two pieces of economic data before we started off, just to get a sense of how the U.S. economy is looking and for the second half of the year, what we can expect. Because as we'll touch on, earnings reports this week were a little bit mixed. But before we do that, there was a couple major acquisitions this week, some big takeover moves. So, Adam, why don't you fill us in on the first one?
Yeah, so one that I covered yesterday was Oracle, which trades on the ticker ORCL. They acquired NetSuite, which trades on the ticker N. It's a cloud company. I think the deal was valued about $9.3 billion, about $109 per share of NetSuite, which it actually jumped to yesterday, just about. I think it finished at like 108. NetSuite was founded in 1998. It was a pioneer in the cloud computing revolution. It was one of the first companies solely dedicated to providing business applications over the internet. And it's actually it was probably the third cloud company Oracle's added. And then we'll actually touch on more about the cloud segment later with AWS, Amazon's web services, when we look at their Amazon's earning report a little bit later.
Yep. So Oracle continuing to add to their cloud portfolio as so many other in the greater tech segment have been doing recently. And you're right, we will touch on AWS later. The other acquisition I wanted to talk about, obviously, with Yahoo and Verizon. Verizon finally putting an end to the Yahoo takeover saga. Just a quick reminder that Yahoo trades under the ticker YHOO. Verizon, of course, is VZ. So like I said, it's finally over. We don't have to hear about the Yahoo takeover rumors anymore. They are no longer. We have an official purchase. Verizon taking over Yahoo's core business for $4.83 billion. Like I said, it's a core business takeover. It includes, the web properties. It does not include Yahoo's stake in Alibaba and Yahoo Japan, and it does not include all of Yahoo's patents and their cash on hand. That will all be spun off into a separately traded, a separate publicly traded company. Again, I'm going to use the word unclear again for what Verizon plans on doing with Yahoo. It seems like it was a move to boost their actual owned online content.
Yeah.
Um, and so that with that, you're going to be looking at what are the types of things that Yahoo brings to the table. You've got Yahoo Sports, you've got Yahoo News, Yahoo Finance, and of course Tumblr. So Verizon expanding out of just their realm of being a communications giant and instead of just linking you to other content or connecting you to other content on the web, actually becoming a provider of that content.
Yeah, these like Verizon, some of these other communication companies, like, the cell phone market's pretty much tapped out. I mean, almost everyone has a cell phone. So I think you might see some more acquisitions like this. I know a couple other companies have done the same just to diversify their portfolio. I think just mix things up. Get bigger.
Definitely. Making your, you know, if you're the company who I'm sitting on my phone and I'm reading Yahoo Finance, which by the way has been incredibly successful for
Mhm.
Yahoo, specifically is one of the few places on the internet that is seeing a lot of millennial activity in the financial world. It is the go-to, seems to be the go-to spot for young
Yeah.
people to get their financial news. Yahoo Sports, I follow Yahoo Sports for the vertical, which is
Yeah.
NBA
I
focused
do the same.
section of the website. Tumblr, obviously incredibly popular with young people still. They've keyed in on that demographic for sure, that millennial demographic. But thing, as you said, they have this incredible network of people who are using Verizon as their cellular provider. So I'm potentially sitting on my phone using Verizon's data network to connect to a website like Yahoo Finance
That they
or
now own.
Tumblr, which they now own.
Mhm.
So, um, kind of almost monopolizing a little bit, and just having a little bit more content for the price. To me, it seems like a smart move from Verizon.
Yeah, it wasn't
I,
bad.
I think there were a couple companies that were rumored in this whole saga, as I described it, that I would have gone, that doesn't make a ton of
Mhm.
sense. Um, but I think they got a good price tag on it, and I am excited to see what they do. Obviously, people unsure whether CEO Marissa Meyer will stay on. She said she wants to stay on. It's been 4 rough years with her on
Yeah.
board so far. We'll see what they do with that. Um, that is all still going to be unfolding for sure. Moving on, though, as promised, earnings reports. We've got a whole bunch, and we are basically even just going to touch the tip of the iceberg,
Yeah.
actually. Um, but yeah, so Adam, why don't you start us off with Twitter this week?
Yeah, so Twitter, under the ticker TWTR, they reported earlier this week, and they beat their earning estimates. They posted a loss of 11 cents per share, and that was excluding 4 cents from non-recurring items, which beat the Zacks consensus estimate of a loss of 15 cents. They missed revenues though. They saw figures of $602 million in the quarter, and our estimate was a little bit higher at 605 and a half million. They did say that average monthly active users were $313 million in the quarter, which is up 3% year over year, and up from 310 last quarter.
Mhm.
Positive, but I think the stock lost 10% after hours in the next day. So
Sluggish, yeah.
yeah,
I
just
mean,
continues to struggle.
at this point, we are looking for user growth with Twitter and all of these earnings reports. I think that investors aren't really going to be getting excited about this stock until we see
Mhm.
user growth that's above the low single digit
Yeah,
range. I mean, to me, that's 3% year over year with everything that they've been doing, bringing Jack Dorsey back on board, investing in, the live streaming,
yeah,
building this presence with Project Lightning, trying to become this source of, current events. I go to Twitter to watch things happen. I go to
yeah.
Twitter to
Yep.
follow along with what's happening and to consume it. And all of that, building that presence over the past year to see 3% growth, to me is really uninspiring.
Yeah, I mean, I think we'll touch on a little bit later too some of their issues, but it was just, it doesn't seem to be stopping.
Hmm.
Twitter's a sad story. CEO doing two jobs at once,
Hmm.
being a CEO
Tough.
of two companies at once. I don't know how that works.
Yeah.
Um, I think we'll get more to it later, but we had another one here with Apple. You want to touch on
Yeah,
that a little
so
bit?
Apple, of course, trades under the ticker AAPL. Apple was struggling there for a bit, kind
A little bit.
of rocky. Couple of reports, iPhone sales dropped for the first time ever. Um, Big rebound this quarter. Beat earnings estimates. EPS came in at buck 42 per share. The Zacks consensus estimate came or called for $1.39. They also beat revenue estimates, saw figures of 42.4 billion. Our estimate called for 41.85 billion, edged out both in earnings and revenue. Couple things to note: the services business grew 19% year over year, which is impressive. App Store revenue, the company said, was actually the highest ever that they've recorded, which is interesting. Got me thinking about what apps came out in the quarter. The only thing I could think of was that ridiculous Kim Kardashian app, but I
Yeah,
don't even know if that came out this quarter or not.
I feel like that was longer ago because that was
Yeah.
in Kanye's song, which was a while ago.
Hmm.
So I don't know if it did, but I mean, I think they needed it. I think it was, yeah, like you said, they were struggling a little bit. I think also they what helped actually was that they were struggling. I know a lot of the estimates went down over the quarter,
Hmm.
so made the beat look a little better than it was. But still, I mean, positive results
Hmm.
always a good thing. But I
And
think they needed it.
also wanted to touch on the fact in the report they called the launch of the iPhone SE quote successful. So, um, I think everyone has a different opinion on
Yeah.
what that word means, but uh, seeing iPhone sales kind of get going again was definitely something they needed. And with the new model, which was the SE, kind of a throwback to
Mhm.
the design of the 5, people liked it. So that's good to hear, especially if you're an Apple investor.
Yeah.
Um, so another solid report was Facebook.
Yeah, they kind of killed it again. They beat earning estimates. They posted 76 cents per share, which excluded 5 cents for non-recurring items, and our estimate was a pretty handily bit lower, 62 cents a share. They also beat revenue estimates. They saw 6.436 billion in revenue, which destroyed our estimate of little over 6 billion. And also their mobile advertising revenue represented 84% of total ad revenue for the quarter, which
Hmm.
kind of blew. I know it blew
Yeah.
kind of our minds. And then that's up 76% from last year. So
Yes.
major
Yeah.
growth in that
Sorry.
area.
Sorry. I just wanted to quick correction there. It's actually up from 76%.
Oh,
So
yeah.
now 84% of all of their ad revenue, which is the vast majority of where their revenue is coming from, is coming on mobile platforms. To me, really fascinating. I think the daily active users they announced was somewhere around like 1.13 billion,
Oh,
um, which is just amazing to
mhm.
me. Most of those people using Facebook on their mobile devices. That's where you're seeing most of the advertising. Um, Fascinating to me how well Facebook has been able to cash in recently.
Mhm.
Um, I think what's also notable about Facebook, and I think I brought this up last week when we were talking about Chipotle and um, how they were struggling with same store sales
Mhm.
growth, and talking about and Netflix and their
Yeah.
subscriber growth, and we're talking about Facebook now. That daily active user number being at over 1.1 billion is certainly notable, but we don't really sit here and talk. We don't analyze Facebook's subscriber growth that much anymore. At this
Yeah.
point, it seems not necessarily to have plateaued, but we're much more interested in looking at things like revenue numbers and how well they're cashing in on those subscribers, those users. Um, Whereas we just talked about Twitter, and the main point is where is the user growth. So it'll be interesting to see if there's ever another social media company where that's the type of conversation we're
Mhm.
having. Because I feel with these social media stocks, it's all about user growth.
Yeah.
Even something down in like Netflix is about user growth too. Facebook has kind of transcended that at this point, and now it's about we have a different conversation entirely when we talk about Facebook's earnings. So, um, other than it was another great report from Facebook, I don't have much to say other than it's just they continue to impress and.
Yeah, I think it's interesting. People see them as so much more than a
Mhm.
social media company for whatever reason. I think it's just because of their pure size and also, some of the different things they do. Um,
I've heard it described as the world's biggest advertising company.
yeah, I mean, personally, I've always said like it blows my mind that these companies are such big popular stocks just because when you look at it, like what do they do other than advertising
Mhm.
revenue? So
Mm.
I don't know. I've never been a huge fan, but yeah, it's interesting. It just seems like people see it as so much more than
Mhm.
like whereas a Twitter or some
Mhm.
of these other companies, it's only user growth.
I
And
will
Facebook, it doesn't much matter.
I will also just clue all the listeners into kind of where my life is at right now. I watched The Social Network this week to get hyped up about Facebook's earnings report, which is I'm like I don't know if that's embarrassing. I'm not afraid to admit it. I was pumped to watch Social Network. I was all in on Facebook this week. Um, Another company that I'm a personal big fan of, Amazon. So Amazon came in this week at another big beat for Amazon, uh, earnings of $1.78 per share, which beat our consensus estimate of $1.14 per share. And they also beat revenue estimates. So this one is a little bit closer, but saw revenue figures of 30.4 billion, which beat our estimate of 29.7 billion. As we promised earlier in the show, we're going to talk about Amazon Web Services. Amazon Web Services saw revenue growth of 58% year over year. I believe it was up 12% from last quarter. Um, again, I feel like these last couple of reports for Amazon, all eyes went straight to how well did Amazon Web Services
Yeah,
do. It has certainly proved to be one of the most profitable segments of the company. Of course, Amazon Prime Day, I think as well fell into this quarter, or was it
little
just
bit.
outside of the quarter? Um, Either way, yeah, that web services stat is the big one to pull on from Amazon. I I at this point don't see any signs of Amazon Web Services slowing down. Like we said, um, the activity we've seen with tech companies boosting their cloud offerings has been notable.
Yeah,
Oracle this week proved that with the NetSuite takeover, but I think it's safe to say that Amazon is one of the leaders in the cloud
I'd agree. Yeah,
services kind of area. Um, and we look at Amazon Web Services as one of the premier offerings in that whole realm. Um, and, more and more often we are seeing technology companies, which, at this point, Amazon is obviously much more than just this e-commerce company. It
yeah,
is it is this
definitely.
tech giant. Um, we are seeing the tech companies that are having success this year are having success through their cloud platforms.
Yeah, I mean it's been
Um,
huge. It's been huge for them. It's been huge for Microsoft. It's been huge for Adobe. I mean, it's
touched
just
on Azuri or
yeah.
however you pronounce that. I'm not sure how you say
I
it.
I couldn't tell you, but I mean, cloud continues to be important, and I think as long as it's also so profitable for these companies, and as long as they can keep growing it, I think we're going to just
hmm
continue to see the an importance
hmm
put on that sector and
Yeah.
these different companies
And I
using the
don't.
cloud.
I mean, I don't know enough about like the internal how these services are designed and then marketed and sold and whatnot to speak too in depth about it. But it makes sense that these cloud services are the profitable parts of these tech companies right now, just simply based on like the whole point of the
Yeah,
cloud to begin with, which is less actual
hmm
hardware, less infrastructure.
costs are
Um,
super low. So
the,
I
the
mean,
the costs are just
yeah,
it's a very low cost operation. So, um, finally, our final tech giant reporting this with touch on a lot of tech internet
yeah,
stuff.
Big week for them.
And we had Alphabet Inc., for the company formerly known as Google.
Yeah, so obviously trading on the ticker GOOGL. They posted earnings this week. They beat earning estimates. They posted $7 a share, beating our estimate of $6.47 a share. And then they also beat revenue estimates. They saw revenue figures of $21.5 billion, which absolutely destroyed our estimate of $16.88 billion. Yeah, crazy beat on revenue. And then so they also saw a 29% year-over-year increase in aggregate paid clicks and a 7% increase from last quarter. They also saw a 37% year-over-year increase in paid clicks on Google websites, representing a 9% increase from the last quarter. So really positive earnings report from Alphabet.
Impressive growth from a company of that size. Looking back on it, it seems that this whole Alphabet reshuffle, I think the overall point of it was to kind of increase internal efficiency, and it was definitely something that had a much bigger impact inside the company than from like an investor perspective. But if the point was to kind of boost efficiency, their performance since the reshuffle has seemed to imply that that's working, at least from what we can see on the outside looking in. And just, as you said, another great report.
Yeah,
so
they killed it.
But with Twitter kind of being shaky, we had some good reports. Obviously, Apple, Facebook, Amazon, Alphabet, all impressed. Twitter was kind of shaky. We had, like I said, that's just the tip of the iceberg of people who reported this week from some other segments. Boeing and a ton of the aerospace and defense stocks reported this week. Gilead Sciences, Barrick Gold also reported this week from the gold mining, kind of giving a touch into the gold mining sector. A totally huge, busy week. And you can find all those other stories on the site. We'll have links provided for you. But to you, Adam, what stands out as the report of the week, if you will?
One I've been following pretty closely was actually McDonald's. They posted earlier in the week, and McDonald's struggled for a long time. CEO Steve Easterbrook took over, and they seem to be headed upwards. The all-day breakfast thing was a big deal. I think we're seeing that slow down a little bit. Their sales still grew, but not by enough. It's for most people's opinions. They did really well over in Europe. But to me, it was just they're just one company I've always watched, always been interested in. A company that big, how do you keep growing? And it'll be interesting to see what they do at the end of 2016. I know they're expanding the all-day breakfast to include my personal favorite, McGriddles. Some biscuit sandwiches.
Notable.
Yeah, very notable for some McDonald's
We talk about
fans.
food a lot on this podcast.
Yeah, big foodies over here. But that was one that really caught my eye. But yeah, what did you think? What stood out to you?
I agree with you on the McDonald's sentiment, especially because of some of the CEO's comments about the state of the restaurant industry and what we know that means for the state of the economy as a whole. Obviously, we tuned in on some of these shaky economic details. But history tells us that when the restaurant industry struggles, it's normally kind of a red flag for an economic recession, because that's the first thing people cut out of their lives when they don't have the money to just kind of spend out as a consumer. So McDonald's earnings reports are always important because of that. So definitely something to clue in on. Along those same lines, Buffalo Wild Wings reported this quarter or this week. Their quarter, I think you covered that article, I think, right? So the stock was up like 12% the next day.
Which was surprising because their earnings reports weren't that great. Their same store sales declined, stuff like that. But the stock soared. They taught what caught my eye in theirs was they had a hedge fund manager buy like 5%. And
that's
their
right.
And their CEO,
activist investor.
and he's made some that investment firm has made a couple suggestions for what they can do, maybe change their capital structure. And then the CEO made comments on it, and she was like, "Well, yeah, we could take on some debt, change up the franchising situation with their restaurants, and stuff like that," which I think investors like to see,
Hmm.
because their same store sales have been going down. If they could shake things up,
Hmm.
go in the other
Yeah.
direction with growth, could be a very good sign.
Yeah. So yeah, I was tuned in a little bit this week to the restaurant stocks that reported,
Definitely.
just because I wanted to get a sense of the economy. I thought it was funny that the CEO of Buffalo Wild Wings blamed the underperformance of the Chicago sports
Yeah.
teams on the same
Yeah.
store sales
Taking a shot at
decline.
them.
Apparently, Buffalo Wild Wings has a strong presence in the Chicago area. For those of you who don't know, we here at Zacks are located in downtown Chicago. So it was a disappointing year this year
Hmm.
for the Blackhawks and the Bulls. Bulls missed the playoffs. Blackhawks out in the first round. They actually
Rough.
combined for 28 less playoff games this year than last season. And the CEO said, our market is so strong in Chicago that hurt us.
Yeah, I was
I thought
surprised
it
by
was
that.
my first guess was someone posed the question of like, guess what the CEO said was to blame, and I hadn't seen the report yet, and I was like, I don't know, maybe Americans don't like soccer, and there's a
Yeah.
lot of soccer on TV this summer, and that might have contributed. No, it was Chicago sports teams underperforming to
Yeah,
blame.
I was surprised by that. I don't even know where the closest Buffalo Wild Wings is to the office. I honestly couldn't even tell you. So I didn't
That's
even
true.
know.
I'm assuming when they're talking about their Chicago presence, they're talking more of a
Yeah, yeah.
suburban
Very
outlet.
true.
From a purely food standpoint, I'm not even that big fan of Buffalo Wild Wings as a restaurant. Like, it's not my go-to wings place at all. Again, this isn't a food podcast; it's a financial podcast, so we won't linger on that. But I thought that report was interesting, and in the midst of earnings reports that can often be very bland, beat, miss,
Yeah.
stock up, down, whatever. Uh, I got a little chuckle out of that. So
I thought it was
definitely
funny too.
interesting. Before we wrap things up, though, I think I want to just touch again on Twitter. Uh,
Yeah.
I
It's a
don't know.
perfect way to put it.
I you can't see it doesn't translate well in podcast form, but I'm just like kind of shrugging my
Yeah.
shoulders because I don't know at this point. Um, it's almost disappointing because it's frustrating for me as someone who wants to see the company succeed.
Yeah.
This isn't sports. I don't like cheer for companies, but there are certain brands and companies that I'd like to see succeed. It puts a smile on my face when Amazon
Yeah.
performs well because I think that the company is doing really interesting things for consumers out there. Twitter to me is a platform that I use a lot every day. Um, I think that its simplicity as a social media offering is great, and I think that there's so many awesome ways that you can get tuned in with the world through Twitter. Um, and they've made, as you said, such a strong push over the last
Hmm.
year or so to increase how you interact with Twitter and how you interact with things that are happening in the world on Twitter. And it isn't paying off yet. And it's just getting to the point where it's like, when will this ever end? When will we ever see this growth that this company needs to start turning profits and to get to stock performing well again? Um, I don't know. I don't know. At this point, I'm out of ideas. We'll see. I guess looking forward, whether this deal with the NFL, and they just recently expanded partnership with like an esports league.
Yeah.
They're
Thought
going to
that
be
one was
live
interesting.
streaming more events. We'll see if that pays off. But if you're holding Twitter long right now, all of those things that are happening where they're partnering up and buying rights to stream NFL games, all that is for you right now is just huge upfront costs.
Yep.
And you're continuing to see these earnings reports that disappoint. So, you hope these upfront costs turn into good investments down the line. But we just don't know right now.
Yeah. I have a couple thoughts on Twitter. I think first of all, a public company like that that's in such a rut that needs to change things up having a CEO who's doing 2 CEO jobs at the
Yeah.
same time, and Square is the other one that Jack Dorsey does. I don't I don't know how that's possible.
Yeah.
Square's in a huge growth phase, so I don't know how that's possible. If he would concentrate on Twitter, I think that would be a help. I also think a big thing for Twitter would be a possible acquisition.
And to
I
be
know that's
taken
been
private.
yeah, or taken private to where their growth isn't so scrutinized. I think that would be a big help
I think
because the problem with
I
being a
could
public
not agree more.
yeah
This is what I was just gonna say.
the problem with being a publicly traded company is that your share price is very set on your growth and stuff like that. So they're instead of being concentrated on how to better the company, they're just looking at how do we grow and how do we grow revenues and stuff
Mhm.
like that. So going private would be huge. I think it could be a big help. Or being acquired by a company like Facebook or Alphabet, I know has been thrown around a little bit with some extra cash. Um, could help the company out with better,
Yeah.
I'm not going to say better management, but companies that are established.
I don't even I would agree with you. I mean, I was gonna propose as my kind of final thing is like for them. I don't know if it's Facebook or Google or whoever. I don't think it needs to be one of these big publicly traded giants to come in and take them over. What I think could be great for the company is some sort of activist investment
Yeah.
firm taking it over, taking it public or taking it private. Just going behind closed doors again,
Yep.
figuring out what they need to do, like you said, without the scrutiny of shareholders, because it just adds another level of pressure to it.
hmm
And it gives them a little bit more time to figure things out when they're behind those closed doors. So um, I don't know if it'll happen. It probably won't, but an idea.
Yeah,
If
we'll
any,
see.
if anyone from Twitter is
Is
listening,
listening,
or if
yeah.
anyone is interested in buying
Let us
Twitter
know if you
that's
need some
listening,
help.
I say go for it. So, um, yeah, like we said, another busy week of earnings. There will be few more reports next week that we'll touch on. Kind of getting over the hump of the second quarter earnings season, though. So yeah, thanks for tuning in. As always, all the links to all the stories be provided in the attached article. Make sure you check them out if you want all our full coverage. And thanks for listening, and we'll be back next week.